Well, good evening, folks. It is Shooter Scott Henderson. Of course, at the end of the presentation, please do review our disclosures. Now, first, some of the structural changes in swing trade notes. Now, I have moved the position sizing and risk management to a link at the bottom of the page. In other words, an external link, only because the article was getting too long. And that's not something that we're going to redraft every week unless we change the model. And of course, that didn't happen this week. So just to bring your attention to that. In addition to that, we have now put the trading view charts as a link under the symbol. All right. With those two technical things, let's jump right into it. My father used to talk about sailing a lot, and the analogy seemed to work this week. When we try and get as prepared as we can to go out in the boat, right? Life jackets, backup water, et cetera, et cetera. But when you get out on the boat on the water, it's kind of unpredictable. It can get really choppy real quick. Well, there is some significant comparison to that. In trading. In fact, I recall a time I was out on a charter fishing vessel about 100 miles off the coast of the Keys, really South Florida. You couldn't even see land at that point. And we had this torrential thunderstorm hit us, and I was amazed how fast the seas got really rough. I mean, I'm talking 30-foot waves in that storm. So the only thing we can do when we hit those uncharted waters and that type of choppy waters in trading is understand when that change is coming, and we have to react to it appropriately. Now, hopefully in the prior weeks, both Kirk's call and my call to raise cash was something that all of you did. And of course, you continued to sell into rallies like we kept telling you. So that's hopefully the case. And hopefully you have a decent cash position here. So as the market bottoms, maybe we can find some good entries long. Now, we still have the basic macro drivers here. Inflation, is back. The FOMC minutes sort of dictate that, except I think they get real aggressive cutting again if that inflation data continues to grow. Right now, gold is really teetering on 3K. I actually think we're going to hit 3,500 by the end of the year. And China is still driving liquidity, which is a good thing, because if China wasn't driving liquidity, we'd be down 10 to 15 to 20% from where we are now. So it sort of held us up at a time where we probably wouldn't have been. So we have some very, very specific sectors that, probably will be good places for us to step our toe back in. Defensive stocks like gold. Once crypto finds a bottom, will probably be a good place. Momentum and growth will probably be a good place, but not today. Now, the recent SPY actions, basically the line in the sand for me was a break below 605. SPY. And we pushed down to 602 into Friday's close. And, we're bouncing just a little bit. We're up about 20 handles on the S&P as I'm looking at this, but I don't know that holds. Pre-market, we should have gotten a rally into the close. Obviously it was optics, so that noise was there. So we'll see exactly how that plays out. But my gut instinct from the number of charts, which briefly, I'm just going to flip through some names after I go through this portion of swing trade notes to give you the breadth of what I see. So for the bulls, you want to watch support levels. You want to use very strategic positioning sizing, a lot of cash secured puts if you want to start buying the dip. Now is the time to look at selling cash secured puts in something like the SPY, if you were thinking about that, Dan. And the movement, 599 needs to hold. If it doesn't hold, 575 is on the table pretty quick, right? Now, last week, we had I'm going to say a meandering week, because the main reason we even booked a decent profit was cash secured puts. We closed something out. But overall, we've had a very good start to the year. I am not motivated to add too many positions unless I have some serious conviction. And right at the moment, I don't have a lot of serious conviction. So there's certain things I like in these market conditions, and I'm going to stick with it. So expect some more cash secured puts. And in this article, we're drifting a little bearish. There were a lot of names, and there were specific reasons why I picked them. But let's go into next week's earnings. All eyes are on Nvidia after the close on Wednesday. Semis, matter of fact, if you want, market's a little weak. Don't think we miss. but it will really roil the markets if they need a miss. So we want to keep that in mind. So something like Soxal puts might be a really good idea, something a little deep, which we'll discuss in chat, obviously going into Wednesday. And there's a lot of names. HIMS just got annihilated on the Woogavy news that the government reduced the shortage, but yet they're selling an extremely discounted version of that. I think it's overdone. So I'm watching the heck out of that. The same thing with TTD, got annihilated. Actually, it was in my swing trade notes last week. Never got my buy number, never got my 8039, so we never entered. That's one reason we have a specific strategy. And you should have a specific strategy. This is why we enter where, and there's a reason why we're entering. In TTD's case, that's when the bearish trend stopped and we became a little bullish again, right? And that was a very micro trend. But the bottom line, at the base of that flushing candle, we needed to get back above that first inside candle to continue in a bullish manner, and we didn't do that. So now I'm going to be watching Restaurant Cliffs on Mondays, going into Monday's close. Very interested there, very interested in Zoom. However, really depends on how we open. If we open decent and we get a decent push, Friday was an Optex event. That's the way that I'm going to view it. If we don't, we continue lower, then I'm going to be hesitant to put on the longs because market-wide is going to get a sell. And in that case, even if you have winners in earnings, they're completely unpredictable. So you can't buy the upside. The only thing you really is short. What I really liked was SoundHound, all right? Obviously, Nvidia, right? I like CRM as well. So, we might drift in that direction a little later on. Now, Stellantis, STLA, has been doing really well on the auto finance side because they are directly connected to Dodge and Chrysler and all of that, which they've had some very good sales on their vehicle. So I would expect for them to beat because they have all of those low interest rate deals that are hitting this quarter that they had going into the holiday. I also like Instacart as well. So we'll see that even Lemonade's good. There's a lot this week that I'm interested in. And just like Friday, I left a few minutes early because I was going to buy something that I didn't want to buy because I wanted to buy it really bad and I didn't buy it. So now so far season, 77% have reported, 76% have been profitable. Pretty solid earnings, guys. Revenue surprises were 62%. Guide was a little light in comparison. 56% were positive, 44% was negative. Now, by the way, hopefully AI will be able to get me into that box of 44% offered positive guidance versus the negative guidance and actually attach that to Elliott waves and so it becomes constructive. That's one thing I'm finding that AI has done for me is it's allowed me really to expand my view where I otherwise just don't have the time to do it. All right, so long, PPD. Let me just go to the chart. Now, this is the continuation play. I don't think it slows down. It held up. It was one of the most relative strength stocks. It basically didn't care. It did not care what happened in the market at all. I'm fine. So my thought here, and the most prudent play is cash secured puts. However, I kind of prefer the April-May expiry 135 to 150 strikes, and that is going to be totally based on your premium and your risk concept or your risk threshold. This will be one of the last names to catch a cold with everyone else, and selling 120 to 125 cash secured puts is extremely conservative. It is probably the most prudent way to enter into it. Now, at the same time, we have a primary wave setup on PDD, which measures our primary wave 3, measures all the way up to 316, way out in 27. So we now have a nice consolidation period. We have some confirmation. Primary wave setup occurred at 8801, which is well below us. We've now back tested it with a higher low, which is going to target the top of the range. So we, of course, I like cash secured puts on PPD currently because it allows us to build a position for that position trade on a longer term view. And that's my thought. And I'm going to stay. Sometimes I read a little bit. All right. Now, note that I have long swing trade setups and short swing trade setups. The reason being is there's not a lot long that I wanted to chase, that I didn't want to put the risk on with current market conditions, so I didn't. And I didn't want to encourage you folks, of course, to do the same as well. Now, let's talk about Hyatt. Now, it's already flushed, but my main point is here, we are just now hitting the main breakdown of this whole pattern. So this pattern on a continuation basis heads all the way down to the 260.18 at 120 from where we are. This is the broader picture of the breakdown. So our first target is going to come in around 135 from where we are. So I like short-term puts. 60, 90 days max out, 130 to 140 strikes. Right at the money a little bit. March expiry, actually I like for continuation of that. Sell calls around 145 to 150 if you're holding common, which probably you're not, but that's the thought. Now we also have a wave C potential extension, and these are the kind of trades I like to chase personally, which we really haven't done very much in fundamental trends. Part of the reason was, honestly, I just couldn't manage everything. So I had to limit my book. AI's allowed me to expand back into that a little bit more. That organizational structure that's coming to my table is really helping me look at these. So structurally, we have an XABC pattern that measures down to 88 further to the downside. So in that scenario, our T1 target expanded on this entire leg is 124, T2 comes down at 111, and T3 comes in at 96. On top of that, now we have one little demand shelf here, and we're going to know pretty quick whether that holds, but it's thin, it's skinny, right? Once it's taken out, it's going to be fast. That's the thing, is it'll be quick. Just like this was quick. I can see a cascade of something equal, etc. And a lot of it has to do with the way this candle is. We need to break this trend support line first, right? For this type of pattern to manifest. Let me come back here. And that trend support line, ultimately, it actually comes in here right at the one, just shy of the 161.8, so like right here. Prior. Now, our current wave retrace target is 136. So you got to manage the stops aggressively if you're taking this trade, because there is a likelihood that it doesn't continue. However, with this look, to me, we tried to get price out. We didn't. The flag, basically became a bear flag, broke down. We've now wicked below these two prior lows. So we're now looking for continuation. We're looking for that 178.6 to the downside. I just can't see it not manifesting. It was my highest conviction look that I had. So that was the main reason. We even went bearish because I had more conviction. So next one is TREX. Now, the only thing I don't like about TREX is the options absolutely stunk and they're skinny. But I like this look. And I like this look because what we already have. Ultimately, what we have is either an ABC, which this would be A, this would be B, and we get C down. Or this is an impulse leg, and this is leg 1, and this is leg 2, and we get leg 3 here. So I have some conviction in the pattern. So where are we wrong? 64.61. We get a push above 64 bucks. Yeah, that's quick. We're going to know if it fails us. So you're going to risk $4. Still might be 50 or 60% if you're taking puts. But ultimately, our target is going to come in right around 54, 46, and wave 3 down at 38. So short term, we're looking at 55 to 60 puts, March, April expiration. The $60 offer the best option due to the fact that they are tighter in price. The spread was 13% versus 33% on the 55. So from a standpoint of slipping, and then also from a standpoint of being able to exit, all right, the 60s are probably the smartest way to enter here, and only add the 55s if we break. And in this case, add below 58. So we add the 55s and then add again at 55, 52. So you want to continue to scale. And that pretty much is what my thought is. However, we have a potential wave extension C on TREX as well. Again, these are the types of trades I really like. I like wave extensions, especially on wave C. So completely different target, same entry points. It's just we want to position ourselves to add a little deeper. And so you're going to continually to add into the move on your level. So it breaks 53, you add. It breaks 48, you add. It breaks 46, you add. Because your target is that 61.8. once it breaks these levels. Once we're below the 50%, it's 61.8. We break below the 61.8, the next target is 78. It'll be fast and quick. And I always like this in a prior chart. In a prior way. Reason being is we have a reversion to the mean, extremely euphoric, flushed here. It tried to get back to highs and it was rejected. So structurally, when I look at these waves, I want to understand exactly what's going on. And basically what this is telling me, and I don't have this trend line on here, forgive me. It at least is going to want to retrace this 50% bid because that's equality. Drive 1, drive 2, drive 3. And what can drive 3 be? Potentially an over. So that's what I have for this week, folks. Great trading. Until next time.